Hello, everyone. Welcome back to another exciting episode of my weekend series dedicated to price action based technical analysis. I'm Sheriff Daramola, and today we are diving back into the XAUUSD chart as the gold market showed some sign of a rebound following the recent sharp decline triggered by the unexpected inflation data from the United States. The key moment from last week's trading setup didn't happen until Tuesday when we successfully scooped in over 750 pips from three sell positions after the US CPI data came in hotter than expected. If you want to catch up on last week's daily commentary for educational purposes, you can find the link in the description box below or in the top right hand corner of your screen if you are watching on my YouTube channel. As we look ahead, we will be mindful of the ongoing efforts by the US Fed to address inflation amidst a resilient US economy. However, it's important to also note that market sentiment will continue to be influenced by expectations regarding the timing and magnitude of the first Federal Reserve rate cut in the coming week. As always, we will analyze the current market structure from both technical and fundamental perspectives, leveraging tools such as the economic calendar, trend lines, key levels, and chart patterns to unravel the potential trajectory of price action in the coming week. Before we proceed, it is important to note that this presentation is for educational purposes only and should not be considered as financial advice. While our goal is to enhance your understanding of price action analysis, always exercise caution and seek guidance from a professional financial advisor before making any investment decisions. With the groundwork laid, let's delve right into the business without further ado. So our first point of connection for this week is the daily time frame as usual, where I will be taking into consideration the nature of price action since the month of September, and that's about an historical data of 5 to 6 months, which we will be using to guide our trading decisions for the week. Well, the first thing I was able to notice here, for those of you who have been with me for a while, you will be familiar with this particular structure. And the first thing you would observe is the fact that the market has been very bullish in the last 5 to 6 months. And to further emphasize the strength of the buyers here, we have an ascending trend line to work with, as you will see here. And of course, you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we shall continue to look out for patterns and structures that supports the idea of buying the assets. And the only condition that will make us want to sell is for price to break down the ascending trend line. Now, in addition to this trend line is our new key level for this week, which is situated at the $1,985 zone. And in fact, this zone here has played a major role in determining the direction of price action since last year, July. And in fact, if you look at this level closely, you'll see how during the month of July stroke August, it was more of a selling niche, as you will see here, and not until when price broke out of this level in the month of November, price action had remained above the structure to further emphasize the strength of the buyers in this market. And look at what happened during the second half of last week. Despite the strong bearish momentum following the US CPI data, we saw that as soon as price got into that confluence between the ascending trend line and the key level at the 1985, we saw another buy pressure resumed from that area. Now the question going into the new week is, will price remain above both of the structure to further emphasize the strength of the buyers, hereby pushing price further to the upside? Or are we going to be seeing a situation this week where the strength of the US dollar may cause price to drop and break down both the ascending trend line and the key level to incite a sell-off in this particular market? Well, to guide our trading decisions for the upcoming week, I've been able to identify a simple trading setup on the 4 hours time frame, which we will be using to strategically position ourselves for the next move. However, before we go into the details on the 4 hours time frame, it's important that we keep tabs with the fundamental factors that will be influencing the market sentiment in the coming week. And as we all understand that by monitoring the economic calendar, we aim to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and timing to position ourselves ahead of this event. So right here on the economic calendar, and of course based on the assets we are looking at for this week, we shall be focusing on economic features from the United States economic docket. Now for this week, for the upcoming week, the first high impactful event is coming up on Wednesday, that's February 21. And of course, we are looking at the publication of the last FOMC meeting minute, as this minute provides insight into the discussions and decisions made by the Fed regarding monetary policy, including interest rates, of course. This minute is crucial to market participants' decision because they offer clues about the future direction of interest rates, which can of course significantly impact the value of the US dollar. Then fast forward to Thursday, February 22nd, we will be looking forward to the publication of the S&P Global, and the S&P publication will involve both the service and manufacturing PMI, which of course offers us key insight into the health and performance of the service and manufacturing sector of the United States economy. These reports provide valuable data on factors such as business activities, new orders, and employment levels, which can directly influence market sentiment. So for next week, these are the high impactful events we will be looking forward to. And of course, we understand that the anticipation of this event has a way of influencing how market participants will behave, which of course would reflect on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame, where we shall be dissecting and identifying a simple trading setup that we will be using to guide our trading decisions for this week. Now, what I did here on the 4 hours time frame was to take into consideration the nature of price action since the beginning of this year. And of course, since the new year began, it has been more of price action finding lower highs, which of course reflects some profit-taking activities following a robust move in price action towards the end of last year. And if you look at the structure closely, you'll see that since the later part of the month of July till this moment, price action has been transitioning into what I would call a descending channel. After we can see connecting the series of lower highs here, we have the resistance line of that descending channel, and then when we connect the series of lower lows, we have the support line here. So it gives us a uniform perspective into how price action had consistently found lower lows and lower highs in the last 1 month. Now, in addition to the structure, you will see that during the end of last week trading session, we saw how price action closed exactly at the resistant line of that descending channel, which interestingly shares a confluence with a psychological level, that is the $2,015 area, which of course had played a major role in determining the direction of price action since the beginning of this year. Now, you would agree with me that we are at a crucial juncture in this market right now, where depending on how price reacts to the $2,015 area will determine if we are going to be buying or selling this asset this week. If price goes ahead following this engulfing bullish candle on Friday, break out and retest the structure, we'll have no other choice than to look out for patterns and structures that support the idea of buying, as the breakout of that resistant line is a sign that that trend line may no longer have the capacity to negate all bullish attempt from that area. However, if price action continues to find selling pressure below both of the structure, it may be another opportunity to sell, where a further breakdown of our key level at 1,985 will welcome more opportunities to add more sell positions to our existing trade. So this is my simple view on this particular asset for this week, but trust me, I will be with you in the comment section on Monday morning after monitoring how participants in this market will be reacting to this current structure to give you an idea of what I think is likely going to be happening. If you have found this content helpful and useful in making your independent trading decisions for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. And if you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you would always stay updated with the latest ideas I share, and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.